Hey everyone, welcome back to Corporate Decoder. Today, General Motors co-GM just filed an 8K reporting a director's departure, and I'm seeing a subtle but important clue about the company's future direction. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is trimming its board size, which could signal a shift towards greater efficiency or a more focused strategy going forward. So what exactly is this filing about? General Motors GM announced that Jonathan McNeil, a member of its board of directors, will not be seeking re-election. He plans to retire from the board after the upcoming shareholder meeting on the 2nd of June 2026. Essentially, Mr. McNeil is stepping down. The company stated that this departure is not due to any disagreements about the company's operations policies or practices. This is important because it suggests a smooth transition and not an indication of internal conflict. The company expressed gratitude for his service and contributions. Here is where it gets interesting. In light of Mr. McNeil's departure, the board plans to reduce its size. This means after the upcoming annual meeting, the board will go from 11 directors down to 10. This is a subtle but potentially significant move. Why is reducing the board size a big deal? Often companies trim their boards when they are looking to increase efficiency, streamline decision making, or perhaps prepare for strategic changes. It could mean that they feel they can operate effectively with fewer overseers. In the auto industry, where margins can be tight and competition fierce, any move that suggests greater efficiency is worth paying attention to. Think about it this way, if you have a smaller group making decisions, it can sometimes lead to faster action and a clearer focus. Historically, companies that are looking to tighten their belts or perhaps pivot their strategy sometimes make these kinds of adjustments. Let's consider the current landscape for General Motors. We see that the market cap is around $75.1 billion. The price to earnings ratio is 30.4, which is a bit high but not extremely unusual for an auto manufacturer in certain market conditions. They employ a large workforce of 156,000 people, indicating a massive operation. Recent headlines show a lot of investor interest with people searching for more information about GM and its stock. Some analyses suggest the stock might be overvalued according to GF value, while others see a very attractive risk-reward scenario. This indicates a lot of differing opinions among analysts right now. We also saw that the CFO Paul Jacobson sold some shares recently, which is something investors always watch closely. The company's common stock is traded on the New York Stock Exchange under the ticker symbol GM. This is where most investors interact with the company's equity. The core of the company's value for shareholders is its common stock. The filing confirms this security is registered and traded. This section details the securities registered with the SEC and the exchanges they are listed on. For General Motors GM, the primary security is its common stock listed on the New York Stock Exchange. This is standard for a company of this size and public profile. Now let's connect this board change to the broader context. General Motors GM is in a highly competitive and rapidly evolving automotive market. They are investing heavily in electric vehicles and autonomous driving technology. With such massive investments and a complex global operation, any move towards a more streamlined leadership structure could be seen as a positive step toward agility. The reduction from 11 to 10 directors isn't a drastic cut, but it is a clear signal that the board itself is undergoing a refresh. This might be a precursor to other strategic initiatives or internal adjustments aimed at optimizing performance. Think about it, historically companies that have undergone significant strategic shifts or faced major market disruptions have often looked at their governance structures. A smaller, more focused board can be more nimble in responding to these challenges. Given the industry's pace of change with new technologies and shifting consumer preferences, General Motors is undoubtedly navigating a complex path. The biggest opportunity I see here is that a more focused board could potentially accelerate GM's transition into a future dominated by electric and autonomous vehicles. The risk, however, is that if this reduction is seen as a sign of underlying issues rather than strategic optimization, it could unnerve investors. But based on the company's own statement that Mr. McNeil's departure is amicable, the former seems more likely. Overall, this filing is a small piece of news, but it highlights a movement towards a potentially more efficient governance at General Motors GM. It is a subtle signal, but in the fast-moving automotive world, these subtle signals can sometimes precede larger strategic shifts. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video and subscribe for more. Join our Discord community linked in the description.